So, hello everyone. Today I will talk to you about some crazy numbers. $6 trillion. What can it represent? So it's not million, it's not billion, it's trillion, right? Well, it can be 25 million, more than 25 million Ferraris. That's a lot of cars, right? I don't know why would I put this. Or it can be approximately 134 times market capitalization of UBS. Well, in our case, $6 trillion is the projected cyber fraud cost by 2021. That's just in a few years. Huh? And on top of that, it's very hard to spot fraud. It takes on average 18 months to detect it. And if it's ever detected, because most remains unnoticed. So there's a problem here, right? Banks are losing lots of money to fraud. It's getting harder and harder to prevent fraud because fraudsters are getting more organized, sophisticated, and creative. And on top of that, in addition, fraud is discovered too late. Money is already out of the bank when it's discovered. And what happens? Customers, they lose trust, and banks lose reputation. What if I told you that we could actually detect fraud before it happens and address these issues? Well, how do we do that? What else? Coffee solves everything, right? Nespresso machine. We say it like this because we are the Nespresso machine of risk mitigation. How does it work? Let's say you want to have your vanilla flavor coffee. You put your capsule in your machine. There you go, you have your nice coffee. For the banks, if you want to address, let's say, e-banking fraud or internal fraud, you also put your control, so the capsules in the machine. The machine, in this case, this is our enterprise risk platform, and you address the issue. So like this, we have over 300 controls, and these are carefully created by our risk consultants, addressing different internal and external fraud schemes. And we also have a marketplace where actually our users can continuously upload, download the newest controls when there's a new one, and always remain up to date, and they can also create their own controls. But going back to this question, like you can see that we are disrupting risk mitigation here, because it's no longer this manual and painful, it's more automated. But going back to the question of how we actually detect fraud before it happens. Well, we explained this by our magic controls, the capsules, and our scientific secret sauce. So for this, we leverage on big data technology to extract the data and model it for fraud use cases. And then we not only monitor the transactions, but also the user behavior. Because at the end of the day, who commits fraud? It's us, right? Human beings. So we have to monitor user behavior. And we monitor user behavior across the entire banking system, across channels, IT layers, and transactions. And this is also very unique to detect and prevent fraud. And we did dynamic profiling for banks, both employees and also customers at the individual level, and we define a risk score. Because we each have a certain way of doing things and spending our money or working, right? And fraudsters, they don't commit fraud overnight. They prepare their case little by little. They look at dormant accounts, look at the weaknesses in the system here and there, and they actually give lots of signals while they're preparing their case. And then our magic controls, they run continuously 24/7 across the entire banking system and spot these signals, these red flags that are giving high risk score and that are unusual to predict the coming fraud. So this is how we predict fraud and prevent fraud before it happens. It's a bit like Amazon store. So because you like this and that book, or you read that, here we thought you might have liked this one. It's a bit same because you did this and that, we predict there's a fraud coming on the way. And our machine learning algorithms, they continuously improve our risk model so we can obtain always the best results. So once our system detects fraudulent behavior, what happens? Then it sends real-time alerts to the responsible staff by SMS or email. And after that, it's simply a joy to use our solution. I'm saying this because our head of R&D is very proud of our dashboard. It's very easy to use and intuitive, but also very powerful to do forensics and investigation. And afterwards, we have automated reports and documentation in the case manager that helps with auditing, also a creation of cases. To sum up, at the end, thanks to our technology, banks could obtain 80% reduction in the number of false positives. And that also helps banks to enable, to ensure that they deliver the excellent customer service, right? Because they don't go back to the customer call each time, is it you or not? So that's also the advantage. And good news for bankers as well, they also can save 93% of the time dealing with these false positives and hits. And they can discover new fraud types. They can reduce fraud losses by 54% thanks to the proactive data monitoring approach. And they can obtain this automated way to risk mitigation. So it becomes as enjoyable as drinking your coffee, right? And last but not the least, they can ensure real-time and proactive prevention to then sustain the customer trust reputation on top of also reducing fraud losses. Just a few words about us. Who are we? Who are NetGuardians? So we were named a Gartner Cool Vendor in 2015. And we are headquartered in Switzerland. And we have our offices in Nairobi, Kenya, in Singapore and Poland. We were also in European FinTech top 3 last year. And we have more than 50 clients in 15 countries. Some of our references include, for instance, Commercial Bank of Africa in Kenya, Commercial Bank of Ethiopia, Stewart Bank in Zimbabwe, and more banks in Africa, or European banks like Raiffeisen, Santander, private banks like Gone Rail in Switzerland, and more banks in Asia, coming from Asia and the Middle East. So that was my presentation. Thank you very much.
Thank you, Mina. Questions, judges?
Thanks, Mina. So yes, I mean, we as banks, we're very aware of that number, and lots of hard work going into it. So I just wanted to know, it feels like you need a lot of our data, or you need all our data. So first question is, can we trust you? I assume so, a lot of people are doing that. But can you explain a little bit how implementation works? I mean, do you sit on top of the production layer? Do you have a copy of transaction data kind of on a daily basis? Trying to get my head around the integration challenge and the data challenge and the privacy challenge, and what kind of safeguards you have around that.
So in terms of the data challenge, so as you said, it's like, because we need to get data from different places, I said we are holistic. But what we do is, again, going back to this, how we define our controls, use cases. So we first of all go to the clients and start with the risk assessment, and we define the use cases they want to address first. So let's say they want to address internal fraud, and as we've been working with numerous now more financial institutions, we start taking actually the data that we need. So it's not like it's big data available and then let's put a bunch of data scientists and make it happen work. It's not like this. So we start from risk consultant approach first, and then get the data, necessary data from the necessary places. So we have also, in terms of integration, preset connectors that work also with core banking. So that's how we deal with the integration.
On there's quite a few AI engines out there doing the fraud detection. You're the first guys I've seen that do the proactive or the fraud prevention. So you're stepping forward in the market. If I was to take the difference between a normal, say, obviously you're going to outperform every traditional risk management process, but on an AI engine point of view, have you seen the difference in reduction of fraud on the preventative versus the traditional, even if it's traditional AI now? What would you sort of say the difference is from a percentage point of view? How much fraud did you spot sooner?
Well, it's hard to say, because we could obtain this reduction in number of false positives, but looking and saying we could detect that fraud type, it's very confidential. So we have with some banks, we could obtain recently some examples, but what we have seen compared to traditional solutions, first of all, that the first impact was really we could discover all the fraud types that they had already, and also discover new ones, because before they were using more rule-based solutions and stay with the same kind of patterns and not really discover what is available in the big data. So that was the first thing. And then we could see also the reduction in the false positives that I have mentioned. because of this going out of this traditional rule-based approach. And with the machine learning, now it's also the next phase is really improving the model. We use unsupervised machine learning, not to really say, okay, this is the fraud type, and then we see what's going on. But it's a bit like the maintenance of the planes or something. We don't see actually if there's a problem, but then we look at the signals, we improve the model machine learning and see if there's a engine problem coming from the pilot or something. So that's a bit a few answers to your questions.
What's been the most successful use case that you've implemented, purely from a return on investment for your customer? If you could maybe just share some details around that.
The most successful case?
Use case. You've implemented successfully, yeah? And return on investment potentially, if you can share that with us.
Yeah, that's a good question. So, first of all, I think recently I could give one recent example because we got really facts from there. It was around monitoring of payments, so to make sure that they can securely monitor the payments transactions. And there we could actually improve the efficiency, operational efficiency as well at the bank compared to what they had before. And they could then also monitor all the payment transactions and really improve the customer experience as well. Because again, going back to this question of number of false positives, that's one example that has been very successful. Or for internal fraud use cases also, we had several banks using our solution for internal fraud. And it's very difficult to detect collusion cases. And that is very important, and we could detect a complex collusion internal fraud cases like between employees or teller and external customer colluding together.
Yeah, I have a question in terms of integrating with different forms of channels. So I can imagine that, especially in Africa, the mobile banking channels are important for your customers. So are you seeing that things in Africa are different for your clients than they are in other parts of the world?
Yeah, good question. As we have clients also in Africa, mobile fraud is very pertinent. It's less because in Europe, it's a bit like, let's wait and see. So they are not very adapting new technologies, but we see actually new technologies coming first from Africa, and we address a lot mobile banking fraud in Africa. And as you say, we see differences in Europe, but it now is converging because they are a bit slower in Europe, the banks, but then they are afterwards following up with emerging technologies, and then we tend to see the global fraud challenges as well. So at the beginning it's a bit different, or we see like card fraud a lot in Asia, but then afterwards, as banks are also adopting new channels, the same kind of channels, then afterwards we see a global also growing, converging global phenomenon for frauds.
We're going to have to call it there. We're going to run out of time.
We can catch up. We can catch up
I'm not
later.
the boss. Ladies and gentlemen, Mina Fornered from NetGuardians. Thank you very much.